So, what if I told you that one decision, made by one of Britain's brightest entrepreneurs, is about to have a multi-billion-pound impact on, well, on all of us? It's not a what-if scenario. It's happening right now, and the fallout affects every single taxpayer in the UK. And to really get our heads around this, we've got to thank the experts at ProTax Accountant. They're the ones who arranged and developed this entire discussion so we can all see what's really going on behind the headlines. It seems like a simple question, doesn't it? But the answer, wow. The answer involves absolutely eye-watering sums of money, a massive clash between fast-paced innovation and slow-moving regulation, and ultimately a fundamental choice about the future of the entire UK economy. So what's the magic number? It's this: 3.4 billion pounds. That isn't just a number on a screen. That is the amount of potential tax money that has literally just walked out the door. Just let that sink in for a moment. All right, so here's how we're going to break this all down. We'll start with that massive £3 billion goodbye. Then we'll get into the push and pull factors making this happen. We'll look at the regulatory gridlock and this growing trend called the Great British Exodus. Most importantly, we'll explain exactly why you should care and what this means for Britain at a crossroads. Right, let's kick things off with the man at the center of this whole story, Nick Stronsky. He's the billionaire co-founder of the Fintech giant Revolut. And his recent move is what puts that unbelievable 3.4 billion figure right into the spotlight. So here's the deal. Stronsky has officially changed his tax residency from the UK to Dubai. Now, why is this such a massive deal? Well, Revolut is currently valued at a mind-boggling £55 billion, and his personal 25% stake, that's worth a cool £14 billion. And this brings us to the heart of the matter. Capital gains tax, or CGT. Basically, when you sell something that's shot up in value, like, shares in a multi-billion-pound company, the government wants a piece of the profit. And in the UK, for a top earner like Stronsky, that rate is a hefty 24%. This chart just shows the sheer scale of what we're talking about. If he had sold his shares while still a UK resident, he'd be looking at a tax bill of up to £3.4 billion. Now, to put that into perspective, the UK's entire capital gains tax revenue for a year is about £20 billion. So one guy's tax bill could have been a huge chunk of the national total. It's incredible. So the big question is, why would anyone make a move like this? Well, it all boils down to some incredibly powerful financial incentives. It's a classic case of push factors from one country and pull factors from another. You see, the UK's current tax system is, for some, effectively pushing its biggest success stories right out the door. And at the exact same time, places like Dubai are pulling them in with a financial offer that is, let's be honest, almost impossible to say no to. I mean, just look at this comparison. It's night and day. A 24% capital gains tax in the UK versus 0% in the UAE, nearly 40% on dividends versus 0, a 40% inheritance tax versus, you guessed it, 0. If you're a founder who's built a hugely successful company, the maths is brutal. The UK has become a really tough place to realize that value. And this isn't just a numbers game for billionaires. This quote from a UK tech entrepreneur really hits home. It shows you the real feeling on the ground. There's this sense that the very ecosystem that helped them grow is now actually pushing them away. But hang on, it's not just about the tax. That's only half the story. Stay with me here, because this next point might actually surprise you. It's about the slow, painful grind of UK regulation. This timeline just says it all, doesn't it? Revolut, a company born and raised in the UK, applied for a full UK banking license more than 3 years ago, and they're still waiting. They're stuck in this sort of regulatory limbo, which creates massive uncertainty and really holds them back from competing properly in their own home market. So what's the holdup? Well, the regulators have some legitimate concerns. They're worried about whether Revolut's internal controls can keep up with its absolutely explosive global growth. They're looking at things like anti-money laundering systems and the risks that come with having 65 million customers. It's this classic tension, right? A super fast innovator versus a cautious regulator. But the end result is that Revolut's growth in the UK is pretty much stuck on pause. Now, that's not all. This is where we need to zoom out, because this isn't just about one guy or one company. This is about a massive, economy-wide problem. It's a deeply worrying pattern. You see, it always starts with individuals. You've got Stronsky. Then you've got Herman Narula, the founder of another big tech company, Improbable. He's also planning a move to Dubai, and he's been very clear, blaming what he calls anti-entrepreneur policies in the UK. And these high-profile stories, they are just the tip of a very, very large iceberg. Get ready for this number. This is the projected number of millionaires set to leave the United Kingdom this year alone. 16,500. And here's the crucial point. The UK is on track to lose more millionaires than any other country on the planet, more than China, which has its own major economic issues, and way, way more than Russia. This isn't just a warning sign. This is a 5-alarm fire for the UK economy. Okay, so you might be thinking, a few thousand rich people leave, so what, right? I mean, why should a freelancer in London or a small business owner up in Manchester even care? Well, let's connect the dots, because this is where it really hits home for everyone. Here's a pro tip for you, a really simple way to think about it. The UK tax system is like a shared bill for a house. Now, if the person who earns the most money moves out, their share of the bills doesn't just vanish. Nope. Everyone else who's left behind has to chip in a bit more to keep the lights on. And this chart really shows why their departure matters so much. In the UK, a tiny percentage of the population pays a huge slice of the tax pie. The top 1% of earners, they contribute about 30% of all income tax. So when they pack their bags and leave, they take that enormous contribution with them. And that has a ripple effect that touches absolutely everything. It means there's less money to fund the NHS, our schools, and fix the roads. It means there's less private investment going into the next generation of British startups, which means fewer jobs. And critically, it puts huge pressure on the government to either cut services or raise taxes on the rest of us to fill that gap. So all of this is building to a really critical moment for the future of the British economy. The UK is facing a stark choice. Either change course and fast, or just accept that this brain drain, this wealth drain, is the new normal. And here's a little did you know fact that should be a massive wake-up call for everyone. This isn't just about people leaving anymore. The money is following them. For the first time ever, in the first half of 2025, the UAE actually attracted more investment into Fintech than the UK did. The whole center of financial innovation is literally shifting away from London. And this really is the ultimate question that today's policies and the constant threat of new exit taxes are forcing entrepreneurs to ask themselves. Does the UK want to be a launchpad for success, or is it becoming a gilded cage? Now, just to be absolutely clear, we're not taking political sides here. We're simply reporting on the mechanics of the situation. This is an economic reality. Capital, just like water, will always flow down the path of least resistance. It goes where it's treated best. And of course, any government faces that really tricky balancing act between making the country an attractive place to be and raising enough money to fund the vital public services we all rely on. Okay, before we wrap up, it's really important that we share our official disclaimer. The information we've discussed today is for general informational purposes only, and it's not intended as specific financial advice.
The tax world is incredibly complicated, and it's always changing. So to really understand how these massive shifts might affect you or your business, it is absolutely essential to consult with an expert. You can get in touch directly with the specialists at Pro Tax Accountant for that personalized advice.
And finally, if you want to stay on top of the biggest economic stories that actually affect your life, please do make sure you subscribe to the channel. Thanks for joining us.